Like and subscribe and click the bell icon to get new video updates.
Elon Musk needs an exit from his ill-timed Twitter bid. May 16, 2022, 11:55 am. Save login, register or subscribe to save articles for later. Share normal text size, larger text size, very large text size, 0. Leave a comment. You don't have to look hard for the reason for Elon Musk's decision to put his $44 billion $63.5 billion bid for Twitter temporarily on hold. A check on two share prices would do the trick. One is Twitter's and then other Musk's Tesla. Their prices entwined ever since he spent $2.9 billion to acquire 9% of Twitter early last month and then followed up with an agreed $44 billion deal to buy the entire company. Elon Musk's bid to take over Twitter could be in jeopardy. Credit, AP. When Musk's interest in Twitter was first revealed, its share price rocketed from just under $40 to $50 before peaking at $52 a share on the day the agreed offer was announced. They are now trading back around $40 a share. Tesla shares, which underwrite Musk's claim to be the richest person on Earth, were trading at $1,145 when his holding was first disclosed. They fell to just under $1,000 when the board approved the bid, but have since tumbled to about $764. At $40 a share, Twitter is worth a bit over $30 billion or $14 billion, 32% less than Musk has committed to paying. Tesla, in the meantime, has lost about a quarter of its value, or nearly $240 billion, since his interest in Twitter was made public. The backdrop to those particular share price movements is the continuing broader meltdown in share markets. Since Musk's offer was agreed to by the Twitter board, the S&P 500 index has fallen another 6.4% and the tech-oriented Nasdaq market 9.2%. Thus, in a volatile and threatening market for equities, Musk has committed to overpaying, badly, for a company that loses money and had negative cash flows last year and which, if the bid were to succeed, would have to service the debt component of the bid's financing. Moreover, his own ability to offer cash is largely underwritten by his Tesla shares, which have plummeted. The original offer was going to be funded by $27.5 billion of equity and $16.5 billion of debt, with Musk arranging what is effectively a margin loan secured by a tranche of his Tesla shares that, at the time, covered the loan 6 times over, for about $12.5 billion of the equity component. There was reportedly a trigger in the covenants for the margin loan that would force its repayment or perhaps enable the banks to seize and sell the underlying Tesla shares pledged as collateral if the Tesla share price fell 40%. Since the initial announcement, Musk's advisors have been scrambling to find co-investors to reduce Musk's exposures. They've had some success, raising about $7 billion from an investor group that includes Sequoia Capital, Qatar Holdings and Saudi's Prince Walid bin Talal. They're looking to raise more. It would appear that Musk has belatedly recognized that he's at risk of paying far too much for Twitter and, given the continuing implosion in share markets, putting a massive amount of his personal wealth, both his paper wealth and the $8.5 billion he raised by selling Tesla shares at the start of the process, in jeopardy and destabilizing the already sliding Tesla share price in the process. The value of Tesla has shrunk by $240 billion since Musk made public his Twitter interest. Credit, Bloomberg. His problem is that there is no legal exit from his announced bid. The Twitter board can hold him to it unless he can't raise the funding, and both the Twitter board and Musk would probably be sued by Twitter investors if he tried to walk away or reduce the price. Nevertheless, Musk does seem to be attempting to lay the ground to either abandon the bid or renegotiate its terms and lower the price. While claiming that he remains committed to the deal, he has cited a recent Twitter filing that said fake accounts on its social media platform account for less than 5% of its users for putting the bid on hold while his bid team tests the Twitter claim. Twitter's estimate of the fake accounts is one it has made routinely in past filings, but one which most analysts believe understates the actual proportion. Twitter does insert some qualifications into the filings, explicitly saying the number could be higher, and Musk did have the opportunity, which he didn't take, to conduct a proper due diligence before committing to the offer. That makes Musk's pausing of the deal look like a pretext to renegotiate the offer price or try to walk away. If he were able to ditch the bid, he would be up for a $1 billion break fee, although that might ultimately be seen as a small price to pay to avoid throwing away many multiples of that amount and putting his personal fortunes at risk by proceeding with the offer. Beyond the